Okay, good morning, everyone. Let's see here if we got everyone here. Yes. Okay. All right. Good morning. Looks like we've been in this range. It's about an 80-point range outside of last Thursday, where we went up, closed at a high, and then it was rejected again. Market, rejected that, and now we're still in that range. However, we're at a century mark, and typically takes time to break that. I'm pretty bullish. I think we're still going to be breaking that. Obviously, I'm long futures, and so with that, the sell in May type of thing doesn't really come at the beginning. It usually comes after about the third week after expiration. Again, this sideways movement is really, really bullish to me, and I think Ike's comments this morning as well. Um, looks at this, and it seems to be pretty bullish as well as far as the advanced decline line on this. So again, trades are doing well, and for the SPX trades, I may be rolling up the monthly spread. Probably will be doing that today, so stay tuned for that. And with that, I'll turn it over to you, Ike. Thanks.
Okay, good morning, everybody. Uh, let's take a look at the SPX weekly chart. We'll drill down, and you can see on the chart here that last week was a very, very narrow range week, and price closed just a fraction above the previous week. And the takeaways on this technical chart, if you look at the bottom, the weekly fast oscillator I use is you can see it flipped bearish last week, and the 13 slower oscillator is overbought. So keep that in mind. The oscillators are both either bearish or overbought. So let's go down to the daily chart here, and here's a longer term daily chart, and you can see this is the low back in March of 2020, and you can see this really really nice pattern, reading left to right, going up over here, and so let's go down to a shorter time frame daily. That's not the right way to say it, but this is a daily kind of looking closer, and you can see, we said keep in mind the weekly is bearish. The daily oscillator also flipped bearish last week, so you've got a dual time frame bearish oscillator position. In addition to that, you can see up here, if this was last week's close right here, you can see this is one, two, three. Price closed lower than the previous 3 days low, and that's usually not bullish. So the primary pattern is considering this maroon three right here from one to this nice impulsive wave up here into 29 April is done. That's the primary count. Uh, if this is the case, what we're going to be looking for is a pullback. And the way you measure these pullbacks is you take the 38.2 to 50% pullback off of this wave three whenever it completes. I don't know if it's done yet, but when it does complete, that's the way we usually take a look at the pullbacks. And those numbers are right there. I put them in there so you can read them better: 40.79 to 40.36 off this March 25th low. Additional key support, very key support, is down here at 39.74, and if that breaks, something else, something is bearish is certainly afoot. So the way I put it to people in the room is we are bullish until we get some price follow through, and what we'll be looking for is a close below the previous day's close, which was Friday's close, and then if that's the case, we can take a look at doing some bearish type trades with the stop just above uh, 42.18, which would be a very low capital risk stock. I also have here, I want to read you guys about May. It's called the May Almanac. It says the best performing stock market months are said to be November through April. This year, the market picked up 27.9% during that period. Although May is hailed as the first month of the stock market's worst performing 6 month period, the almanac shows that over the last 24 years, the market has gone up more than down. The average gain is 3.09% for May, while the average loss is 4.58%. The 2020 best and worst performing 6 months were reversed as the best performing 6 month period notched a 10.6% loss, whereas the worst performing 6 month clocked a 15.5% win. So what they're saying is that normally this next 6 months coming up is not the best period, and last year it was the best period, so it flipped. So with that in mind, I just thought that was kind of interesting, to see that we're traditionally going into the May, which is 50-50 as far as closing up or down. So let's drop back down to the ES chart right here, and you can see there's a couple alternates on the table. This could either be we're an A looking for a B up here to C, or this could be the bottom right here, and we're going 1, 2, 3 up. Either way, this is what's so nice about knowing these patterns sometimes. Either way, whether it's an A, B, a B wave down here and a C wave up, or a 1, 2, both are looking up. So also looked at the 60-minute oscillator, and that is pointing up. And the advanced decline of basket of stocks that I'm looking at is also uh, up. It's a basket of 8,697 stocks, so that's also bullish. So I would say we're going to have a bullish morning coming up anyway. Uh, that's all I got, Al.
All right, let's get them. Thanks, everyone, and we'll talk soon.